Other blocks are some of the most powerful supply and demand zone in the market, but most times when you mark them on your chart, price just cuts straight through them with no reaction or a little bit of reaction followed by a complete blow through. And after a while, you start wondering whether other blocks work in the first place. Here's the truth: other blocks do work, you are just treating all of them the same. Not all other blocks are created equal. Some other blocks are weak zones and price will slice through them like they don't exist. Others are actually institutional levels, areas where smart money executed large position and is willing to defend them again. High probability order blocks have specific characteristics, they appear in specific locations and they behave in predictable ways when price returns to them. If you don't know this specific characteristic, you are basically fishing blindly. But once you understand how to separate high probability order blocks from weak ones, everything changes. Your entries get cleaner, your stop loss gets tighter, and your win rate improves. In this video, I'm going to be explaining what an order block is, how to pick the best order block to trade from, the exact criteria and filters I use when marking them. Then we'll go through a real chart example so you can see exactly how these order blocks form and how price reacts to them in live market conditions. Next, I will teach you how to actually trade from these zones and also get those sniper entries. Towards the end of this video, I'll also give you guys some criterions that make these order blocks even more high probability. And finally, I will explain how a good order block should behave as price approaches it. And this will help you cut your losses short or know when to ignore an order block entirely. There's a lot of things to unpack in this video, so let's get started. But before that, guys, please, this video actually took me a ton of time and effort to put together, so I would really appreciate it if you can go ahead and like the video and also subscribe to the channel. So I'll see you guys inside. Alright, so what's an order block? An order block is simply the last opposing candle before an impulsive move. And this impulsive move actually tells you one thing, that large players enter the market there. Okay, this is not retail traders, this is not random traders, these are institutions, and they couldn't finish all their orders in one go. So when price returns to it, that zones becomes relevant again. But here's what most traders miss: the market leaves a lot of orders behind, but only a few of them actually matters, right? So that's the reason why some of these order blocks actually work, while the other of these some of these other blocks, as you can see that I marked here, actually fails. And that's the scope. I think that's the major scope of this video. I'm going to be explaining it. So how do you pick the best order block to trade from? The first thing I want to see is a liquidity sweep, a sweep of liquidity. Then the next thing I want to see is a break of structure. Then I want to see some form of internal liquidity. This is internal range liquidity. And this internal range liquidity can form like this. It can form in two ways. Then something else I want to look out for is I want to see this thing occurring in a key level. And this key level is valid, is relevant in if you are taking reversal order blocks, if you are trying to trade a reversal order block, or if you are trying to take an order block in line with the trend, then we don't really need this thing. So now this internal range liquidity can actually come like this. This is where the break of structure occurred at this zone. So this internal can come like this, or it can come in form of a double break of structure. What I just need, let there be some form of internal liquidity that price is going to take out, right? So this is what I'm looking for a high probability order block. And this is where the order block is sitting, at the origin of the impulsive move. So this is what I'm looking for to pick the best order block to trade from. Now this case is actually a reversal order block. Let's talk about continuation order block. How do you pick it? Now we are looking for almost similar characteristic. We're just looking for, what we are looking for is liquidity sweep. Then liquidity sweep. Then we want to see some form of in a structural liquidity. Then an actual break of structure. Then we can take an order block at this point. Then this whole trend can continue. We are really getting our liquidity sweep again. Then we have our structural liquidity, our internal range liquidity. Then we can still take this place at this place. Now let me try to explain all this schematic diagram for you now. Remember what I told you guys. Remember the keys, the criteria I explained to you guys. The first thing you want to see is a liquidity sweep. If you are trying to take a reversal setup, if it's a reversal setup you are trying to take, you want to see a liquidity sweep, a break of structure, and it should be occurring a key level. But if there is no reversal setup, if it's not a reversal setup but rather a continuation setup, this key level is not relevant. But now let's talk about the criteria um, that are actually similar to all of them. So the first thing is actually a liquidity sweep. After a liquidity sweep, we want to see an actual break of structure. Let's level it out. Actual break of structure. And after that break of structure, the next thing we want to look for is internal range liquidity. We want a liquidity that price is going to actually take out for it. For that would be and that would be a catalyst to price trading. So this will be a stacked confluence as price swept the liquidity to go back and absorb the orders that was left in this order block and expand to the high upside. So this structural liquidity, this internal range liquidity is key. Now, for the next example we give here, this first one is actually a reversal setup, right? Because price was actually from here, you see price was actually in a downtrend. Now, this these ones are continuation order block. So the next thing we want to see for continuation order block, we basically want to see the same thing, which is a liquidity sweep that already occurred after this price took out this entire range liquidity. And the next thing we want to see is an actual, did it break structure? If it did not break structure like this is where this break of structure occur. If it did not break structure like this, yet I'm not taking this trade. I want to see it actually break structure. So that's basically it. I want to see it break structure, and this break of structure can occur in many ways. It can actually occur in a form of double break. As you can see, it break the first structure, break the second structure. The most important thing is this internal range liquidity. To understand the concept, the most important thing we are looking for is one, a liquidity sweep. Two, okay, let's fix this and back. One, a liquidity sweep. Two, a break of structure. It needs to break structure. Three, we want to look out for internal range liquidity. Liquidity is sitting inside the range. From year to year is a range. So liquidity is sitting inside the range. That price is actually going to take out, and as price is taking it out to now tap into our other block, and this will be an added confluence. So it's going to sweep the liquidity here, take out those resting orders in that other block and expand to the upside. So that's the criteria we're looking for. Next, we can keep on following it like this. So what else again happened here? You can see we had our liquidity sweep. After our liquidity sweep, then we have our break of structure, the same criteria. So you guys have seen the criteria we need to pick the best order block, right? But we're still going to talk about more things. Example, like what makes this order block even better. Like so, next thing we have is a break of structure. After a break of structure, next thing we want to see is there structural liquidity or internal range liquidity that price is going to take out as it is trading to this order block. As price trade take out that liquidity and trade to this other block. So we are looking for, is there any internal range liquidity, and if we see an internal range liquidity, then we can actually take this other block, right? So we can continue to this. I want this thing to be clear for you guys, and just continue here. So now the next thing we might have here is something like this, right? Forms this thing. So now let's just continue from here. So at this point, we are looking to, there's another block that is formed at this zone. Obviously, after every impulsive move, there's always another block that is formed. But we are now, the next thing we want to do is to look at, does this other block fit the criteria? So the first criteria we discussed is the liquidity sweep, and we got it. The second criteria is, okay, let's say the price is 2 year. Second criteria we said is a break of structure, a valid break of structure. At this point, we have not get it, so we're not going to take any trade from this place. We're going to start placing limit order at this point. We have to wait for it to actually break this break structure. Now as it breaks structure, we are still not going to take any trade from this point. We're not going to set limit order. Why? Because of we are waiting for some form of structural liquidity. We are going to look back and look, is there any internal range liquidity, any liquidity that price is going to take out, and that will be the catalyst to price expanding higher. So that's what we are looking for. So in this case, we have not yet get it, so we have to wait for it. So what the price, let's say price now comes, and if price mitigates level and expand higher. No, we are not interested. The level have been mitigated. We are not interested. What we want to see prices do is form a structural liquidity. And after form this internal range liquidity, then maybe expand high. Then after I form this liquidity at this point, we have now getting all our criteria, which is liquidity sweep, break of structure. Let's label this thing as a break of structure so it can be visible for you guys. We have now have a liquidity sweep, a break of structure, then a structural liquidity that price is going to take out. Then at this point, we can now set our limit order because the order block is nice, is great. We can set our order and expect price to trade to this place. And let's say that price actually, as price tapped into this place, it was trading, then forms something like this. Then finally, so at this point now, after price does something like this, we have a couple of things. We are looking, first of all, we are looking, a new order block is formed at this point. You guys should calm down. Just watch this video. It's going to be long. It's better the video is long. And I'm not here to use these YouTube tricks to try to force you guys to watch the entire video. So this is like a lecture. So you guys need to watch through it. I hope you guys are understanding anything. If you have any question, let me know in the comment section. So the next thing, so let's say at this point, what do we have here? At this point, we have gotten a couple of criteria, which is liquidity sweep. The second criteria we have gotten here is an internal liquidity already. We already have an internal liquidity, but we have not yet getting the next criteria, which is a break of structure. So we have not yet getting a break of structure. So we're not going to set limit order at this point. We're not going to go ahead and set limit order at this point yet. We're not going to go ahead and set limit order at this point. We are going to wait for price to actually form the break of structure. As it forms the break of structure, now at this point, what are we going to do? We can now set our limit order and we expect price to trade down, take out this internal range liquidity. Sometimes I call it structural liquidity for clarification. So in case if you heard me say something like that, so we now expect price to take out that structural liquidity. Then as you take out that structural liquidity, that will be to accumulate liquidity and also collect the liquidity in this order block and expand to the upside. So that's it. And let's continue a bit. I want to explain something. So now let's say at this point, what the price did here. At this point, we now have our break of structure. Obviously, right? So now let's say that price did something like this. Price now go down. We have this order block here, but we are not yet setting any limit order because of many criteria are yet to stack up. Because one criteria is yet to stack up, we have not yet getting a structure, an internal range liquidity. So let's say that price comes back down, and instead of reacting from this level, it breaks this level. As it breaks this level, what do we have here? We have actually a structure break. But since this structure break is against the trend, what we have is called a market structure shift. Right? I hope you guys are understanding what I'm saying. So what we have is a market structure shift, and this is a new order block that is formed. A new bearish order block that is formed. Now, before you're not going to just take this order block. For you to take this order block, this bearish order block, you are looking for a couple of criteria. And the first criteria we are looking for is obviously this last break of structure will start serving as our liquidity sweep. Now we have gotten, next thing we want to look out for is for us to take this, we want to make sure that this is actually occurring in a higher time frame key level. That's the next thing we want to look out for. Now after this thing, we have gotten a couple of criteria. We have gotten a liquidity sweep, a market structure shift, then it actually tapped into a key level, but we are still left with some criteria. We are still left with something. We are still looking for what we are looking for: internal range liquidity that price is going to take out and price continue to downside. So let's say price comes and do something like this, fail to mitigate that order block, then trade lower. At this point, we have gotten all the criteria we need, so we can actually see that we have a liquidity sweep, a market structure shift, it was in a key level, we have our structural liquidity at this point. So what can we do? We can actually set our sell limit order at this point. So this is something we can actually do, expecting price to trade higher to this point and continue to the upside. And there's something worth noting is that this internal range liquidity can form in different ways. It can actually form, like let's say price, before price break the structure, it forms some kind of structural liquidity. It can form in this way. In this way, you see a price forms the internal range liquidity before the break, or it can actually form in this one way in form of a double break of structure. The most important thing we get our internal liquidity that price is going to take out. And once again, this internal range liquidity is key because of when price reach that liquidity, it takes out people that are looking to sell, because at this point people put their stop loss, their sell stop loss order at this point. So what price is going to do is going to take them out, because some people are looking to sell at this zone. Obviously normal market structure traders, people that don't understand advanced market structure, they're looking to sell at this other block at this point. So what will price do? Price will take them out, and this as price takes them out, they flood the market with liquidity. Then they now tap into this other block with the rest, with there's resting orders there, then continue to the downside. That's why that liquidity is key. So these are the criteria to pick best order block to trade from, and this is the way I trade. But there's a couple of criteria that even make this order block better, and that's what we are going to be looking out for. But before that, let's go over to the live chart example. Let me explain this thing so this thing can make sense. But before we do that, I want to quickly explain something we are currently running inside our private community. And we are currently running a challenge, and the idea behind it is simple. You don't just want to learn how to trade, you want to learn why you are actually executing and making money. So the challenge has two routes depending on the kind of trader you are. The first route is for traders who prefer profile accounts. The second route is for traders who prefer trading their own personal life accounts. So if you choose the first route, which is profile route, the goal of the challenge is to gradually build up to 200k in profile funding, starting from the smallest affordable profile, which is 5k or 10k. So the way we are going to do this is that once the account is passed, we are going to use the profit from that account to scale up to a larger profit. So a scaling plan actually drafted, I think, yes, I drafted it. So the a scaling plan I actually drafted was, if we start with a 5k account, we're going to try to pass it. Then we pass it, we're going to try to use the money from it to try to make 3% from the account. Then we make 3% from it. That 3% will get us to the 25k mark. Then from that 25k mark, we're going to try to pass it. Then when we pass it, we're going to try to make like 3%. And that 3% is going to get us to the 100k mark. Then from there, we can try to even scale more than the 200k mark. So that's it for traders that wants likes to go on the live on the Profem challenge, Profem route. So if you like to trade Profem, and this is not just theory, this is actually something that we have been doing for a while, and this is actually an update on the November batch, right? The one we did on November, the last quarter of 2025. So as you can see, the first we basically what happened is that we bought the 5k, traded it. So some people were arranged for around, they have to buy the next 5k, and we pass that first 5k, pass the second 5k, then we finally bought the 25k, and this update was on 10th of November. So we later pass this 25k, and these are the proof. You can actually see it here. You can see the account. This is the 25k that we actually passed. Now, the recent update of this year, so we started this challenge again this year. So that's it for traders that are looking to that like going down the profit route. Now for traders that prefer trading their live personal accounts. So the idea is simple. We're going to start small. We're going to start with $100. So you deposit $100, and we're going to try to slowly scale it up to 1000k mark. That's the goal. And the way we are going to do this thing is we're going to be reaching a decent, we're going to take in decent risks per trade, which is a 10% risks on our account. So reaching 10%, we need 10 losses in a row to lose the account, and I don't ever see myself going through a 10 losing streak. And the way we are going to scale it up, the scaling plan is simple. This is a risk management plan I've drafted out and I've been using it. All the this thing that you guys are seeing on this channel, me flipping accounts, that is how I'm using it. So the risk management plan is simple. The whole idea behind it is that as our account is going up, we're going to be increasing the risk, and as the account is going down, we're going to keep the risk constant. So let's say, for example, starting with $100, my trades are usually 1 to 10 or 1 to 5. So try to make the math easy, starting with a 1 to 10 hour. So let's say we took the first trade that resulted in a win. The account will go from $100 to $200. Now let's say we took the second trade that also resulted in a win. The account will go from that $200 to $400. And let's say we took the next trade and the account and it was a win. It will go from that $400 because we are risking. Notice what we are doing. We are increasing our risk. When we got to the 200k mark, we start risking 10% of $200. We go to the 400k mark, we start risking 10% of $400. So let's say the next trade was a win. We are going to go from $400 to $800, right? So now let's say we start going through a couple of losses. At that $800, we are risking 10% of $800, which is $80. So let's say we take the first trade that resulted in a loss. The account will go from $800 to $720. So let's say we took the next trade that was a loss. The account will go from $720 to $640. Let's say we also took the next trade that was a loss. The account will go from $640 to around $560. So notice what we are doing. We are keeping our risks constant as the account is going down, but we're increasing it as it is going up. And let's say that we took the next trade that resulted in a win. Now we are still risking that 10% of $800, which was the highest price we stopped at. So 10% of $800, that would be 80. That would be $800. 10% of $800, that would be $80, and we're taking 10 out trade, so that would be $800. So let's say we took the next one that was a win. Our account will go from $560 to $560 plus $800, that is 1,000 something dollars. So the way this our results is going to come out, the losses and the win are going to vary. But I just give you a hypothetical scenario. So that's the idea of the whole this, and I explained this thing. I think I explained it in this channel so you can actually do it. So that's the way we're going to use and scale it up. This is something I've been using, right? As you can see here, even if you see the recent post, I think there's a recent post I posted of this one. This one actually started. Okay, this thing, and he has almost passed his profile, right? So as you can see, started 2 weeks ago and started a few weeks ago with less than. Okay, this one started with this and nearly flipped his account to $1,000. So why this one? Actually, this guy started 2 weeks and he has almost passed his profile account. So you can actually check all these things. So this is something that we are actually doing. And if you're interested to join, you can actually send the admin. I'm the admin, so you can actually send me a message on Telegram. But if you're having restrictions on Telegram, you can actually send me on WhatsApp or any other of my social media. Alright, so you can actually check it in the description of this video. And if you don't have money to subscribe, it's completely fine. What I suggest you do is just subscribe to the channel, then go and join this our free Telegram channel. So I'm posting mini trades there. All you need to do is to, I think I pinned a message on this Telegram channel on the way to this risk management plan and also the profit trading plan you can follow. Just follow exactly it and try to build up to that capital. Try to challenge yourself. It's key you challenge yourself by trading. Otherwise, you spend so much time trading without actually making an actionable result. Right, so let's go back to the chart and explain what we're talking about. Right, so this is the first example we are going to be looking at. Now if you are to scroll back up, you can see we are actually in a bullish order flow, right? Remember the rules I gave you guys. So this is me also teaching you guys my personal entry model. The first thing I told you guys is that we are looking for what? We are looking for a liquidity sweep. So you can see what price did here. Price swept liquidity. That's the first thing. Second thing we are looking for is an actual break of structure. This is the last higher high. So we want price to break that structure. So at this point, price break it. And the next thing we are looking for. Now at this point, what do we have here? We have an order block that has been formed. At this point, we have an order block that has been formed. But we are not going to set our limit order yet. We want to look for, okay, what do we have here? We have the first thing you can see here is, let's try to mark this up. But First thing you can see here, we have gotten our liquidity sweep, which is one of our criterias. The second thing is we have gotten our break of structure. It broke not this high, not is this one high, because of this is the last higher high within market structure. As you can see, higher high, higher low, higher high. This is the last higher high that price break. So that's the one we are interested in. So this is where we got our break of structure. So this other block actually trigger a break of structure. The next thing we want to look out for is before we take this trade, this other block, yet we need to try to see is there structural liquidity. And you can see before price break this thing, it actually formed a structural liquidity or an internal range liquidity at this point. So what is price going? So at this point, we can now actually take our entry from this place and put our stop loss at the low of the other block, then target the external. This is called the external of the range, this high. So this is a simple trade. All right, so why do we need this liquidity again? Because what are we doing? We are taking out traders at this point, then flooding the market with liquidity. Then as price does that, that liquidity will be the it also tapped in to come to mitigate the orders that are resting here, and then that's the reason why it expands to the upside. So this is a fixed example. Remember what we have: liquidity sweep, break of structure, then we have structural liquidity, then we take currency. So let me give you guys the next another example. Now, before I give you guys another example, I want to try to put these two things together. So how do you get sniper entry? Right? How do you actually get sniper entry? Okay, no, let's leave this thing. Now let me give you guys the next example. Now this is the next example we are going to be looking at, and the reason why I choose this example is for a reason which you're going to figure out now. So notice something. This is actually the lower time frame. This is that last way we analyzed, but now in the lower time frame, you can still see more setups that you can be taking, and you can still see more setups. So the trend is bullish, obviously, right? Because we are expecting this high to get taken out. So what do we have here? We can actually see a new setup at this point. The first thing we want to see is a liquidity sweep. In this case, we didn't actually get it. So this is a bad side of this. We want to see a liquidity sweep, but we didn't get it. But notice something, not all times that these whole things will stack up. But you want to try to see a liquidity sweep. It's key you look for a liquidity sweep. But let's just say it was there. I really want to use this trade as a case study. So let's just say we had a liquidity sweep at this point. Just bear with me. We actually had a liquidity sweep at this point. So that's the first criteria. The next criteria we're looking for is a break of structure. Now this is the last higher high. So we want to see price actually breaking the higher high. So now where do we get our break of structure at this point? At this point, we have not yet gotten our break of structure at this point. So I won't mark this. I won't take an entry. We are waiting for this other block. This other block are actually this. We are waiting for it to trigger a market structure shift, a break of structure. So until it trigger a break of structure, that's when I'm interested. So this is when it trigger a break of structure. After it trigger the break of structure, the next thing I will look to see, I'll go back and say, are they structural liquidity or internal range liquidity that price is going to take out, that will be the catalyst for price to expand higher? And obviously we had it. You have a lot of structural liquidity that price is willing to take out. So now and only now is when I can take my entry at this zone. Take my instant at the external. So you see how we are doing it. One, liquidity sweep. Two, break of structure. Notice something, this is not where the break of structure occurred. Three, we want to see structural liquidity. Very simple, and this is how I actually take most of my setup. And let me give you guys a reversal scenario so you guys can, then we are going to now talk about how to actually get sniper entries, and then we talk about how to make this how to even make this other block, how to pick the best, make this other block even better, right? Some criteria and make them better. All right, so this is actually a reversal scenario, right? The first thing you can see is that price was in an uptrend, high, higher low, higher low, then traded to a key level. That's the first thing. Before you look for reversal, you need to see a key level. Now, as price break this last higher low, what we have here is called a market structure shift. That's what we have here. Now, The next thing we are looking for, we want to see a liquidity sweep. So we have a liquidity sweep, a break of structure in the opposite direction, which is a market share shift. Then we look to see if we have a structural liquidity, and obviously we have all this structural liquidity sitting at this zone that we can actually take. So we can now decide to take this trade, this order block at this point. Now, obviously in this case we didn't get mitigated, but we'll just say it got mitigated, and we place our entry at this point, put our stop loss at the high, and then target the low, right? So that's it. Now notice something, the trend has switched, right? So what are we going to start looking for? Bearish setup. I remember what I taught you guys about bearish setup. What are we looking for? We are looking for a liquidity sweep. We have gotten it. Then the next thing is a break of structure, and next we want to look for structural internal range liquidity, which is this. And when we get this thing, we can take our next entry at this zone, take our next entry at this zone. So simple and continuous. We just keep taking our next entry. Now the next thing we have here is a liquidity sweep. After a liquidity sweep, we have a break of structure. Obviously this is where the break of structure should occur ideally. For this case, it should be this place, which is the last higher low, lower low, right? So the next thing we're going to check, do we have a structural liquidity? And yes, we actually have all this structural liquidity that was engineered, even this one. So the next thing we are going to do is to look for an entry around this zone, right? So we take our next entry at this zone. Look at how many entries we have already taken, right? So the next thing we want to look for is a liquidity sweep, which we got. After this liquidity sweep, we want to look for a break of structure, which is this below right here. So after we got this break of structure, next thing we are now looking for, do we have structural liquidity? Yes, we have this tiny structural liquidity. As long as it's a swing guide 3 candle is okay, then we can actually target our break, our order block, which is the origin of the move. Take the next entry here, and you notice how many entries you have taken just following the same concept. Now for the sniper entry scenario, I told you guys I'm going to teach you guys how to take sniper entry. It's basically easy, right? When price trades to this level, instead of you taking a trade from here and having your stop loss at this place, what you're going to do is to go to the lower time frame, and you are going to be looking for similar structure, which is a liquidity sweep, then a break of structure, which is a market share shift, then some form of structural liquidity, then you enter. This can actually form like this. The most important thing, we actually have a break of structure in the opposite direction, which is actually a market structure shift. So this is basically what you are going to be looking for. It can come in two ways, either like this or this on the lower time frame. Now by the time you take your entry at this zone, you're going to have a very tight stop loss because this is a lower time frame, and you just target the same place, the same take profit, but your stop loss will be tiny. And the downside with this is that sometimes you just don't, price doesn't give you the confirmation, or price just trade quick from here. So that's it. These are to get sniper entry. Now this is exactly how I trade. I don't try to make my trading more complicated, but there's a couple of criteria that makes an order block even more better, right? Even more high probability. And what are those criteria? The first criteria is actually a displacement. When there is displacement, it shows intention, that smart money, that a move, something occurred there. So when there is displacement before the break of structure that form the other block, example this place, you can see its displacement, it works better. The other block, it makes the other block high probability. So the next thing you want to look out for is extreme order blocks. Extreme order blocks tends to work better than other blocks in the middle of a price range. Remember, there are two types of order block. One is extreme order block, as you can see here. These ones you are used to. Is actually another one that is in between a price legs. So these are usually caused by micro pulses, and they are not that strong. So extreme order blocks are high probability. And the next thing is order blocks in line with the trend. So notice as how easy it is for us to take a trade. Look how many good trades we have taken, as long as we are trading in line with the trend. But if we start trying to take short order block, the trend is bearish from here, obviously. So if we start trying to take order block that are short, let's say we took this order block, nice, it was nice, but do you see we didn't get a good move, a good explosive move? Same as this place, we just get a little reaction and price straight to the lowest ups, and we can actually hold this trade for huge profit before doing this, and that's the advantage of taking a trade in line with the trend. Now let's talk about the something else I want to talk about. It's not really relevant, but just have it in mind, since this is a master class, this is a order block full course, let me just include it. And this is actually how price should react from an order block when it's traced to it. That's something we are going to be discussing, and you need it. The reason why I need it is because of for you to be able to cut your losses short. So if you see that the behaviors price is showing as it traced to that order block is not what we discussed, then you can actually just wait for price to come back to your entry and you cut your loss short. Or maybe let's say you are waiting for lower time frame entry, so and you see that that behavior is not what we discussed, you can actually just neglect the zones. And what are these behaviors? Something you should know is that price doesn't just react instantly from the order block. It doesn't just straight to the order block and start going down. No, it usually have a pause, as you can see here, pause, then a slow down. Price show some slow down. After a slow down, then you have a small fake push. Then price now mitigate the key level, and immediately mitigate the key level, it will be usually fast to the take profit. And the reason for all these things, this is it trying to induce traders, trick traders, take out stop, accumulate more liquidities, and immediately it hits the intended direction, it goes fast to make sure that no traders is in the move. So that's something to take note of. So when you see price that is not doing it, you can try to reframe it. But I don't like to complicate things like this, and but it's worth noting. Alright guys, so we have discussed a lot of things in this place. I hope you guys learned a lot. You should be able to learn a lot, as because of we have discussed a lot. Even look at this one: liquidity sweep, break of structure, structural liquidity entry, and you keep on taking a trade. So I hope you guys have learned a lot. This is a master class. Yeah, as I told you guys, this actually took me a ton of time and effort to come up with and structure the video and make it. So I would really appreciate if you guys can go down and hit that like button. It's not going to collect anything from you guys. And subscribe to the channel if you're interested in contents like this. And also check out our free Telegram channel for us for trade setup and explanation in it. So this, I'm just making trading very easy for you guys. All you need to do is just to follow along the setups I'm getting here. I'm posting it in the free Telegram channel. I'm explaining it. So this is the best free mentorship you can get. So just subscribe to the channel, go and join the free Telegram channel, take the setup, deposit a particular amount or get a particular profit, and just keep trading it, following along, coming on the channel to see the expansion of the trades. And this is how you just get this thing for free mentorship, right? So as always, yeah, I hope to see you guys around.